Dawn Santoriello here. Do you have a Roth IRA? If you do, there will very likely come a time when you want to take money out of that account. The distribution rules for taxation of Roth IRA distributions can be complicated, but if they are followed, the result is tax-free withdrawals in retirement. Now here's what you need to know. 1. Aggregation. Things can get a little confusing if you have more than one Roth IRA. When determining the taxation of a Roth IRA distribution, they take all your IRAs and add them up. That's what aggregation means. Basically means all your Roth IRAs are considered one Roth IRA for your tax purposes. And your IRA custodian reports this distribution on what they call a Form 1099-R, and they send it to you and to the IRS. You'll be responsible for determining the taxation of your distribution. You will use Form 8606 to report the Roth IRA distribution on your federal tax return, or have your CPA do it. Tax your contributions. The amounts up to the total of your Roth IRA contributions are considered to be distributed first. These amounts are not taxable, and they're not subject to that early withdrawal penalty of 10%, even if you take them out before 5 years or before 59 and a half. In other words, you always have access to amounts equal to your contributions, tax-free and penalty-free. So maybe, for example, you contributed to your Roth IRA in 2018 and you're now 32 years old and you need that money. You will not be taxed or subject to penalty when that amount of contribution is distributed. And it doesn't matter that you're not yet 59 and a half, and it doesn't matter how you use your money. Now, the converted amounts. These are amounts up to the total of your Roth conversions are considered to be distributed next. And they are in a first in, first out basis. So if you converted both pre-tax and after-tax amounts, the amount of your pre-tax amounts is distributed first. Distributions of amounts equal to your conversions are not taxable. Remember, you already paid the taxes on those funds when you did the Roth conversion. Pre-tax amounts are subject to the 10% early distribution penalty if you are under 59 and a half at the time of distribution and the conversion was less than 5 years ago. There are exceptions to the penalty, such as a disability or death. If you are over age 59 and a half, you immediately have access to the amount of your converted funds without worrying about the penalty. There is no 5-year waiting period for you as well. Earnings. The remaining portion of your Roth IRAs are considered earnings and are the last thing distributed from your account. Those amounts are tax-free and penalty-free if a distribution is a qualified distribution. A qualified distribution is made after you have had any Roth IRA account for 5 years and you are over 59 and a half. You are disabled, you are taking the funds for a first-time home purchase, or the distribution is to the beneficiary after your death. If your distribution of amount equals to the earnings is not a qualified distribution, it'll be taxable and subject to that early 10% penalty unless an exception applies. Tax-free distributions in retirement. You are not required to take any distributions from your Roth IRA during your lifetime. Unlike traditional IRAs, Roth IRAs are not subject to the lifetime required minimum distribution rules. However, if you do decide to withdraw funds, a qualified distribution will be completely tax-free and not included in your adjusted gross income. By taking a qualified Roth IRA distribution, you can therefore avoid the stealth taxes that hit many retirees hard, such as taxation of your Social Security benefits or Medicare surcharges known as IRMA when your income rises in retirement. If you have any questions, feel free to contact me at Dawn at DS Financial Strategies. Thank you.